mixed performance. Obviously, the insurance sector was affected, like other parts of the economy, by the public health interventions that were rolled out by the government, as well as the general economic disruption brought on by COVID. On a top-line basis, we saw revenues grow only slightly. In the life insurance segment, growth was pretty much flat, and in the general insurance segment, we saw growth of around 5 to 6%. On the life side, it was mainly because a lot of people suffered job losses or periods of the year where they weren't working or not earning an income, and therefore they weren't able to commit to their monthly premium payments. On the non-life side, the volume of insurable assets only grew by a small amount, and that's why we saw growth of 6%. There was a positive in the claims experience for these insurance companies wasn't as bad as previous years. And this is because not as many people were visiting hospitals, not as many cars were on the road, so therefore car claims weren't as high as they have been in previous years. I think the one other thing to highlight was investment income, which is a huge part of insurance, the income that insurance companies earn, did quite poorly. And this is because the assets that they invest their reserves in, for example, government securities yields came down, share prices of equities came down. When you look at the property segment, where a lot of insurance companies allocate a lot of their reserves as well, occupancy rates were low, people weren't paying their rent, so rental income also declined. So on the whole, the investment income for a lot of these insurance companies was actually worse off than the previous years. So I think overall, the profitability of the insurance companies last year would probably be either lower or just the same as 2019.